Great, thank you very much, and thank you to Tribeca for the opportunity to speak today. It's wonderful to be back in Singapore. We make the trip up here for various reasons, and this is a very good reason to be here. I'm going to talk today about the ASX market, what it looks like in the global context, global capital markets context, and then also talk about why it's the leading stock exchange for resources and mining. So first of all, it's quite an active market. So ASX is quite active in terms of capital raisings. Importantly, in terms of number of listings, we do about 120 a year, which puts us sort of in the top 10 exchanges by volume. We also have a long history of supporting junior mining companies. I mean, we listed BHP 140 years ago, and we've listed lots of junior mining companies and larger mining companies ever since. So it's got a long history of supporting early stage companies, and that's also translated into other sectors like technology and healthcare over the years as well. We have robust regulation in Australia. I would say it's not as burdensome as some major markets like the US, but we don't have a junior market model either. We have a main board only, so it's robust but balanced regulation. We've got 2,000 listed companies. About 230 of those are foreign companies, actually, as well. So, you know, roughly sort of 10% or so cross-border companies listed on ASX. And it's a liquid market, $8 billion traded daily, which translates to roughly sort of 80% of the market is turned over by market cap in any one year. And most importantly, we have the 5th biggest pension market globally in Australia. So it's about $3 trillion under management currently, and is projected to grow, as this slide will show, to $9 trillion by 2041. Now, this is an incredible asset to have as a country. It provides extremely strong tailwinds for the equity market, and will continue to do so. The other feature of this is we have the highest allocation to equities of any pension market of any country. So it's about 51% of all of the assets under management allocated to equities. So again, that really supports listings. It was a quiet year last year globally for IPOs. So 120 on average we get per year. We had 45 last year. But that was also the case globally because of the macroeconomic conditions. We do definitely see the IPO market coming back, though, certainly in towards the second half of this year, and then into next year. But more importantly, I would say, in terms of capital raisings, ASX is #1 in the world for follow-on offerings by volume, and has been for the last 6 consecutive years. So this is not always that well known. And in terms of value raised through follow-on offerings, we're more than double Toronto on average, just a little shade under double for last year, but also ahead of Hong Kong for follow-on offerings and capital raisings. You know, so we're really quite proud of this, and this is actually 2 things. On the demand side, obviously you've got the assets under management in Australia, the large pension market and so on, giving those tailwinds for the demand side locally. We also have international investors as well. But on the other side of the coin, it's more about the settings. So we have some very accommodating settings for follow-on offerings. So for example, if you run a placement, you can place with institutions and sophisticated investors up to 15% of your share capital in any one year, and you can do so without shareholder approval, raise the money within 48 hours. So it's an extremely flexible, low doc offering method, and you can use that as a listed company on ASX. So for those 2 reasons, that really helps us become world leading in follow-on offerings. Another important aspect of being listed, of course, is liquidity. Now, driving liquidity is index inclusion. So if you get into the S&P ASX indices, that helps enormously in terms of having that passive investment, but also the active investment that is benchmarking those indices. Now, Australia has a much lower threshold to get into the major indices. So our blue chip index, the ASX 200, has an entry point, and this is US dollars for comparison reasons, of $730 million. The ASX 300, which is $372 million, is also a very well-tracked index in Australia. Now, the equivalent blue chip indices overseas have much higher thresholds. So you have to be a much larger company before you're attracting that investment. And so what we see in Australia is that you're getting access much earlier to that global investment. And that goes on to the second point here, which is we have a lot of international investment on ASX. So in terms of the overall institutional ownership, it's about 54% Australian, so domestic ownership of institutions, but the rest is from overseas, so about 25%, for example, comes from the United States. There's also a good balance between institutional retail investors, so it's about sort of 70% institutional investment, 30% retail across the market as a whole. We've got a good track record in most, or really all, industry sectors. Resources is our most dominant in terms of market cap and number of listings. We've also got some very big banks listed, but we have a long tail of smaller companies that are emerging in all sectors, and an emerging technology sector as well. So we've got some really interesting sort of billion-dollar plus tech companies listed on ASX, and also a sort of world-class peer group of healthcare companies as well. So the market overall is about sort of $3 trillion in total. Now, if I just drill down a bit more into the resources sector as a whole. So resources, here we're showing metals and mining, and then energy on the other hand. The largest bulk of the resources sector by market cap on ASX is metals and mining, but we also have some decent and large companies in the energy sector, oil and gas sector as well. Overall, it's over 900 companies in this space, so plenty of options as an investor, a large menu of investment opportunities. Those key names, the larger companies listed, you'll be well aware of, so BHP obviously being the flagship company listed on ASX, but of course a long tail of smaller opportunities as well. And of those 900 companies, they actually are based or have operations in 96 different countries, so it really is truly a global industry listed on ASX. There's been some interesting new listings recently. We've had, even though IPOs have been a little quieter than usual, we've had some really interesting dual listings, either as a result of M&A or just looking for incremental access to investors on ASX. So Newmont acquired Newcrest and listed at the end of the last year. That's actually listed in the US, of course, as well. Arcadium Lithium, or Arcadium was basically Allchem and Livent combination. So it's a New York listed company, ASX listed company that combined together and dual listed on the US side and on ASX. And then we've had a couple of really interesting copper listings. So Capstone Copper listed in Canada, dual listed just last month. And then Metals Acquisition Corp as well, dual listed, and actually raised money at the same time. So effectively did another IPO in effect on ASX, even though it was already listed in New York first. And NextGen, you heard from just a couple of presentations ago, has been a very successful uranium listing over time, listed back in 2021. In terms of the performance, there'll be no surprise to you that the metals and mining sector has outperformed resources as a whole over the last 10 years. The last 10 years has been more challenging in the performance of fossil fuel stocks. And that just goes to the theme of this whole conference. So metals and mining, obviously a very high level, has outperformed resources as a whole. But resources has also, nevertheless, outperformed the broader index in Australia, so the ASX 200. And the top line there, which is quite a dramatic increase over the last 10 years, are gold stocks. And again, that obviously reflects the gold price over time. In terms of capital raise, we actually raise capital through the cycle. So if we combine secondary and capital raise and IPO capital raise, it's about 12.5 billion on average has been raised every single year for the last 10 years. So that's continuing to be quite strong. So even though, like I say, IPOs have been a little quiet, the secondary capital raisings are extremely important, of course, to grow existing listings. And there's been some good take-up of those placements, rights issues, and share purchase plans over that time. If I go a little bit more into metals and mining specifically, I think this is a really important slide. I wanted to just show you in context where ASX sits compared to other competing exchanges around the world. So if we look at those competing exchanges, I'll start with the sort of top section, which is like, what does a market look like right now? So just in metals and mining, over 770 listed companies. We've got the number one in terms of size, market cap globally of any exchange. And we're sort of head and shoulders above the rest in that sense. And actually even more so in terms of capital raising and IPO activity. So the section below is actually over the last 3 years what we've seen in IPOs and capital raisings. So you can see 185 IPOs in that period on ASX just in metals and mining, which is way ahead of any other stock exchange globally in those 3 years. You can also see in terms of capital raise, this is US dollars again for comparison, about $2 billion in capital raise in just IPOs over that period. And so we're number one, both in terms of those IPOs, but also in terms of number and capital raised in follow-on offerings as well. So that's a really important slide. And quite honestly, I was a little surprised when we put this together, just how far ahead of the other exchanges we currently are. So that just bodes well, both in terms of, if you're thinking about listing as a company, it's a great place to list and raise capital, but also in terms of an investor, the menu of investment opportunities is very long and very wide. In terms of listed companies, we also support them post-listing, of course, as a stock exchange. That's really important. We run various programs for our listed companies in terms of investor engagement. And we also have sort of thought leadership pieces and education on various policy and rule changes over time, and run those sessions with our listed companies to help them keep ahead of the curve in terms of developments on that side as well. And then we also run an equity research scheme, which is subsidized research for smaller companies, for small cap companies, where we subsidize brokers to cover those stocks. And we found that over time that's helped stimulate further research in those names. So to sum up, ASX has enormous tailwinds, and it is in a very privileged position to have a very large pension market that continues to support the equity market over time, and will continue to do so, increasingly so. We have the world's most significant and important metals and mining sector of any stock exchange, whether you're thinking about size or capital raising activity. And then finally, as I mentioned, for investors, it's really important because we have a continuing expanding menu of investment opportunities in the sector as well. And we expect that to accelerate as time moves on, as we go through the second half of this year, as I mentioned, and then into next calendar year. We have 4 members of the team at the conference, so please come and find us, and we're very happy to talk to you further. And if you'd like a copy of this presentation, we have the QR code right here, so please feel free to scan and have that at your fingertips. So with that, I'll close. Thank you very, very much for listening, and enjoy the rest of the conference.